Hello, and welcome to the latest installment of Market Financial Solutions Conversations with Connor. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. Market Financial Solutions are a bridging loan and buy-to-let mortgage provider and are not legal, financial, investment, or tax advisors. This document is for informational purposes only and does not and should not be considered to constitute legal, financial, investment, or tax advice, or be relied upon by any person to make a legal, financial, investment, or tax decision. Therefore, investors are encouraged to seek appropriate professional advice. The opinions and views expressed in this episode are personal to the host and may not reflect the views of Market Financial Solutions. Now let's get started. Sadly, we're coming to the end of the summer, but the property market still had some final flourishes of brilliance before the autumn months arrive, or have a chance to arrive. To start with, house price growth was consistently up across the board in August. Nationwide had monthly growth at 0.6% after seasonal adjustments in July. Halifax recorded 0.4% growth, the largest monthly rise seen since early 2025, and the ONS had the biggest month-on-month growth of 1.4%. For those after a bargain, however, it may be worth looking into new builds. Across the entirety of the UK, the average price for a new instruction for new build properties coming to the market stands at around £427,000 at the moment, which is £43,000 lower than it was a year ago. Remember, prices may be down, but that doesn't necessarily mean demand also falls with it. In fact, all signs point to enthusiastic participation in the current market. Mortgage search activity jumped by 4.4% in a single day following the base rate vote, and according to 20EA, property transactions are set to reach 1.18 million by the end of the year. We're well on our way to hitting this target too, even if it seems lofty at first glance. The latest data from Rightmove showed that we had the best July for sales agreed since 2020 this year. So where could property investors look to keep this momentum going? Well, Colliers recently evaluated major towns and cities across the UK using 5 strategic pillars, as they called it, and named the best locations for real estate investment. Specifically, it analysed the locations' economic, R&D, livability, environmental, and, of course, property-related credentials in this assessment. Based on its criteria, London took the top spot for the first time since it started this analysis in 2021. Bristol, Milton Keynes, Manchester, Cardiff, Cambridge, Leeds, Oxford, Liverpool and Reading also ranked highly. Separate analysis from Savills also ranked property investment opportunities by commuter hotspots recently. The firm looked at over 350 railway stations within a 90-minute commute of London and compared annual mortgage repayments with wider travel costs. Shenfield in Essex topped the list for commutes under 30 minutes, and it was followed by Twyford, Woking, Maidenhead and Furs Platt. It may be worth keeping the commuter belt in mind for any future investments, given that nearly half of companies told the British Chambers of Commerce recently that their staff would be spending all working days on site in the year ahead. Correspondingly, commercial property values also edged higher in Q2. Altus Group found that UK office values rose by 0.8% in Q2, outperforming the European average of 0.3%. Also, mixed-use developments are growing in popularity. The British Property Federation revealed mixed-use schemes accounted for over 35% of new urban developments in 2024, up from just 22% in 2019. Specifically, demand is surging in London and the southeast of England. But of course, the property news story that has got a lot of tongues wagging in recent weeks is the news of a potential property tax being introduced to replace stamp duty. There's been a lot of commentary on this. I'm sure you've read it. I've read a lot of it as well. All that commentary has explored the potential ups and downs. But all we know for now is that, reportedly, the Treasury is assessing ditching stamp duty, which, as we know, is a tax paid by buyers on properties valued at above $125,000, and replacing it with an annual levy on homeowners with properties worth more than $500,000. Some pundits and some commentators have welcomed the news, noting that getting rid of stamp duty could encourage movers to get moving again and support economic growth. But others warn this new tax could hit owners in London and the southeast of England specifically, while also penalising older people who have lived in their homes that have accrued value over the years. We'll have to wait and see for the autumn budget for the details. Over in the rental market, the news has also been surprisingly upbeat in recent weeks. Good Lord found that rents hit the highest level ever recorded in July, with the average price of £1,496 across England. And high yields can still be found across the UK. On this, 9 out of 10 landlords remaining in the market are still turning a profit, according to recent analysis. We've said it before and we'll say it again, buy-to-let is not dead. Looking ahead though, there is a bit of a mixed economic picture. Inflation hit an 18-month high in July, but the Bank of England has cut the base rate. And the economy grew in the second quarter of 2025. It eked out a bit of growth. At the same time, application volumes for bridging loans rose 11% year on year, reaching 460 in Q2 compared to 415 in the same period last year. Specifically, refinance activity and loans for auction purchases rose substantially. As always, as the British economic picture evolves, more and more borrowers are turning to specialist finance to find a way forward. I hope you enjoy your last few days of summer sun, no matter where you are, and I will see you next month. Thank you. If you enjoyed this episode, don't forget to subscribe, like, and share. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. See you next time.